Hi everyone, it's TJ from TJ's Financial Strategies. Here just to give you a budget update. Try to do it as short and sweet as possible. Before I get into it, this is general information, only doesn't take into account your objective situation or needs. Recommend obtaining personal financial advice before making any investment decision. And just to start off, obviously this is a budget in proposal format. It hasn't been fully passed into law. There can be changes that are made. So at the moment, it's about sitting tight and waiting for the final budget. But to look at first what hasn't changed, what's still the same. I feel like everyone's focusing on what has been removed and what's been taken away. So what's still the same? Number one, your family home is still CGT exempt. Main residence exemption still applies. If you already own investment properties, the current negative gearing rules are preserved against those already owned investment properties that have been purchased prior to 12th of May 2026. Going forward, if you are building a new home, which is adding to the supply according to the budget, then that is largely exempt from proposed changes to negative gearing, and you have the option of applying the 50% CGT discount for that as well. So there's a carve out there. There have been no major changes to superannuation, and also there's no changes to the small business CGT concessions. So I think that really summarises where we're at and what hasn't changed at this stage. Now, if I look at what has changed, I just like to look at them in isolation because a lot of people are bundling them up and mixing things up. So first of all, negative gearing, the changes apply to residential property, on negative gearing on residential property specifically. So from 1 July 2027, investment residential property will not be able to offset losses against income for properties bought from now going forward. Losses are going to be limited to the property income or future gains of that property. So each property is going to be its own little investment basket where the losses are going to need to be carried forward against that specific property. So negative gearing, again, isolated residential property is the impact there. Capital gains tax, if we're looking at capital gains tax applies to all assets, not just residential property. The changes to capital gains tax, the 50% CGT discount is being replaced for all assets, not just residential property. So that includes shares, commercial property, so on and so forth. So the 50% CGT discount is going to be replaced from 1 July 2027. It's going to be changed with an inflation-based method and a minimum 30% tax rate to apply on gains based on the inflation method. Then you have trusts. So from 1 July 2028, that's 2 years from now, discretionary trusts will face a minimum 30% tax rate. There are some notes there on being able to restructure with some rollover relief and things like that. So just what the bottom line is, we've got a couple of months between now and when the law will fully pass, so to know the full details of the law. Then we've got a year for the negative gearing and the CGT discount changes, and then we've got 2 years for the trust changes. At the moment, there is nothing to do immediately, but I think it's important to know those timelines. It's important to know what hasn't changed as well, and I hope this has given you some clarity, and thanks for listening.